I'm John Batchelor. This is the John Batchelor Show. Good evening, and good evening to my colleague and co-host and friend, Gordon Chang. Gordon, good evening to you.
Good evening, John.
The Chinese economy, the miracle of the last 20 years, has been giving us numbers the last several months that are unreliable but point to a slowdown. Is that too strong a word, slowdown?
Well, it's certainly a slowdown, John. You know, we got some export numbers and import numbers that just made no sense whatsoever. You know, and you look at the independent surveys, they show that the Chinese economy is heading towards 1 or 2 or 3% growth, nothing more.
And the reason we focus on the Chinese economy is because that is one of the areas that has been growing these last years. Europe is in a recession or near to, although we had some positive information from Germany, it wasn't negative. There's no growth there, and the United States is sluggish, and 2% is the best we can hope for. So China is a place, or Asia is a place we can look for growth. What we're seeing the last months is not a negative story out of China, but one in which we're seeing sluggishness as the same as we have here.
Yeah, I mean, the National Bureau of Statistics in Beijing says that China had 7.7% growth in the first quarter of this year. But once you start looking at things like electricity statistics, manufacturing surveys, price indices, corporate results, you can't even get anywhere close to 7.7.
There are reasons for this, and we're welcoming Stevenson-Yang, who is the co-founder of J Capital Research. She is in Beijing this morning. Property and services. Anne, a very good morning to you. The property market in China, Gordon has instructed me, is a good place to measure the growth of the Chinese economy and also where they've been parking money for some time as an asset class, an investment class. Is there any indication about the property sector in China? Can it be controlled by the government, the bubble? Does it show the slowdown in the Chinese economy? Good morning to you.
Good morning. It certainly does show a slowdown. It's a very odd market because what the government can do is delay the bursting of the bubble, and that's what they've been doing for some time now. So you have this very odd situation where you have a massive oversupply of capacity. Every single city in China has hulking empty buildings. There's really no place you can go in China, the smallest town, that doesn't have empty new properties. But if there's no market for them, then the developers just keep getting loans so that they can wait and not sell at lower prices. So you have this odd situation where you have maybe 10% of the inventory out there that is transacting, and the rest of it just sitting there waiting with the developers being paid not to sell.
And I know exactly what you mean, because in March, my wife and I went to Shanghai, and then we went out to my dad's hometown, which is about 2.5 hours northwest of the city, across the Yangtze River. It's a place called Rugao. And for hundreds of years, Rugao was this dusty little town, sort of surrounded by fields. But when we went back, and the last time we were there 5 years ago, just before the Olympics, when we went back in March, the place was a little Shanghai. I mean, it was just unbelievable. I mean, there were all of these skyscrapers. There were uncountable number of apartment buildings. There was this brand new stadium, and I couldn't know what to say. And what happened was, an old man went to my wife, because we were looking at this stuff, and he said, "Where are they going to get all the people to live in these buildings and to work in them?" And that's absolutely the issue, because they've got all of this inventory, but they don't have the people, they don't have the business. And I think that's really where the economy has got to fall apart, right?
Yeah, it's an amazing thing. It's like every village in China has this dream that they can recreate life overseas if only they build the same buildings. So as long as you as long as you know how to build the Chrysler building, then you're going to somehow be in New York. And unfortunately, that's the way that's working out. It's not happening.
I want to move from the housing sector to the service sector as well, because there's a report from Reuters that the service sector has slowed as well in China. Gordon, I start with you before I go to Anne. Is this logical that the service sector would show the slowdown in exports, the slowdown in the property bubble, that services reflects that?
Well, it's certainly got to, because it's got to follow manufacturing, which is still the largest sector of the Chinese economy. And eventually it was going to catch up with services, and now we're starting to see it because the HSBC Purchasing Managers Index, even the official PMI, showed a big slowdown in April. I mean, there's still above 50, which is the line that divides contraction from growth. And it's still above 50, but not by very much. And I think that what we're seeing right now is just the inevitable consequence of the slowdown of the economy.
And the stimulus that the central government provided over these last years, similar to the way the central bank, the Federal Reserve in the United States, has been buying bonds in order to support the economy. Is that a success? Is that understood as a success in China, that they have intervened?
Let me tell you about a meeting I had last week with a very large developer in a large city in the West, and I asked the developer, it's a city-owned development of a whole new district in the city, and I asked him to break down his finances over the last little while, and it turned out that of all the credit that he's getting and all the financial subsidies from the city government, only between 10 and 20% is actually going to new stuff. Everything else, old credit is going to pay the interest payments on new credit's going to pay the interest payments on the old. So the property sector continues to be this vortex into which all money gets sucked, and so the rest of the economy doesn't have credit to live in. And we have very weak numbers on the service economy, so it's very hard to say what's going on. But clearly, everything is going to be a consequence of that. Property has really just sucked the air out of the whole economy.
Gordon, that means that they borrow new money to pay the debt service on the old loans. They can't repay them. They're not generating money from what they borrowed the loans for, which was to build. So the government gives them new money, and they're just flipping the loans.
Yes, and that means that the banks don't have to recognize losses, which means that the non-performing loan ratios that are advertised, like 1%, which are really very good, are just completely false. And I think that if you had to properly assess the loans on the banks, we'd be talking about 10, 15, 20% NPL ratios, and that would sink the banking system.
And they're treading water very successfully. How much longer, or is it indefinite? Is economics suspended in China?
It's really anyone's guess. What always happens with asset bubbles like this is a crisis of confidence is what breaks them down. And you do have that in a couple of cities around China, but the government is very successful at controlling the flow of information from one to the other. So it has to wait on a critical mass of people who no longer believe that property will increase in price and rush to the market to sell. So it's going to happen, but it's really impossible to predict when.
Gordon, is this part of the story of people pushing their money out of the country and looking to move it overseas by investing in overseas properties?
Yeah, I think that's certainly a very large part of it, because people understand that this game cannot continue for too much longer. You know, Chinese technocrats, as Anne says, can postpone the laws of economics, but they can't repeal them. And people understand this when they see the slowdown in the economy, which is evident when you go to China. It's maybe not so evident here, but as Anne and her people go around China, talk to people, you just get to see what's happening. It becomes unmistakable.
Final question for you, Anne. Is there a defense that people can put in place to protect their assets? Do you see any strategies now for the inevitability?
What anybody who has the means here is doing is moving their money overseas. Unfortunately, for the massive majority of the Chinese people, that's not an option. So instead, they buy gold or they buy some other asset that will actually hold its value.
And Stevenson-Yang is the founder and co-founder of J Capital Research. She's in Beijing. We're looking at the property market and the services market, and also capital flight, Gordon. That's what it's called on this side of the water, capital flight, as indicators that the Chinese insiders know that the economy is struggling. Is that a fair? I'm trying to be fair here, Gordon.
Absolutely. And we got to look at this gold purchases, as Ann talked about, because this is poor people who can't put a company offshore. What they're doing is they're taking their money out of the system by buying the shiny yellow metal.
There's no growth in China, and that connects very completely to the hope for a recovery in Europe and the United States. I'm John Batchelor with Gordon Chang. This is The John Batchelor Show.